In a single day, a company engages in hundreds and thousands of business transactions. To keep track of its transactions more efficiently, companies keep and maintain a set of books or records called books of accounts. Books of accounts are the finance records, ledgers, and journals that compose the company's accounts. These serve as a company's financial memory and comprise of every single business transactions and financial information of a company. There are two major books of accounts: the journal and the ledger.
First is the journal, chronological record of all companies' transactions listed by date. It is often referred to as the book of original entry because we first record the business transactions in this book. Significance of the journal in the accounting process. 1. It shows a chronological record of the company's transactions. 2. It discloses the full effect of each of the transactions per entry. 3. It serves as a check and balance tool of the company. General journal. The most basic type of journal wherein all business transactions are recorded in chronological order.
Some business encounter voluminous quantities of similar and recurring transactions, which may create congestion if these transactions are recorded repeatedly in a single day or a month in the general journal. In order to facilitate efficient and practical recording of similar recurring transactions, a special journal is used. There are 4 kinds of special journal. The first one is the sales journal, used in journalizing all sales of merchandise on account. The second one is the cash receipt journal, used in journalizing all cash received, including cash sales. Next one is the purchase journal, used in journalizing all purchases of merchandise on account. The last one is the cash payments or cash disbursement journal, used in journalizing all cash paid, including cash purchase.
This scene shows that Kent and Gert RTW sold 452,000 pesos worth of supplies from a customer on account.
In the sales journal, it includes the date of the transaction is entered in the date column. A brief explanation of the transaction is entered in the description column or the name of the customer. The column titled Reference, which is the left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger accounts. The charge invoice number or sales invoice number represents the identifying number of the source document issued to the customer when the sale was made. The debit account receivable column represents the amount of the sale transaction indicated in the charge invoice. The credit sales column represents the amount of the sale transactions indicated in the charge invoice. The source document for this journal is the charge invoice issued by the business.
This scene shows that the company receives an investment worth of 25,000 pesos cash from Macasa Company. Cash Receipts Journal. The date of the transaction is entered in the date column. A brief explanation of the transaction is entered in the description column. The column titled Reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger accounts. The debit cash column represents the amount of cash received for a particular transaction. Major categories of receipts, such as cash sales and collection of accounts receivable, are provided with separate columns. These transactions are frequent and repetitive items, therefore a separate column is provided. The column Sundry is used for various miscellaneous and less regular items, such as capital investment, receipt of loan proceeds, among others. The source document for this journal is the official receipts or cash receipts issued by the business. This scene shows that company purchases 9,000 pesos worth of equipment on account from a town company. Purchases Journal. The date of the transaction is entered in the date column. A brief explanation of the transaction is entered in the description column and the name of the supplier. The column titled Reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger accounts. The charge invoice number or sales invoice number represents the identifying number of the source document issued by the supplier when the items, goods, or merchandise were delivered to the company when the purchase was made. The debit purchases column represents the amount of the goods purchases as indicated in the charge invoice from the supplier. The credit accounts payable column represents the amount of the good or items purchased on credit from the supplier. The amount is indicated in the charge invoice issued by the supplier. The source document for this journal is the charge invoice from the supplier or vendor.
This scene shows that the company paid salary expense to the workers.
Cash disbursements journal. The date of the transaction is entered in the date column. A brief explanation of the transaction is entered in the description column titled Reference, which is left blank when the journal entry is made. This column is used later when the journal entries are transferred to the ledger accounts. The check or voucher number represents the identifying number of the check issued for related cash payment. Most of the time, the check or cash voucher accompanies the disbursement. The voucher number may be used as the alternative for this column. The debit cash column represents the amount of cash received for a particular transaction. Major categories of receipts, such as cash sales and collection of accounts receivable, are provided with separate columns. These transactions are frequent and repetitive items, therefore a separate column is provided. The column sundry is used for various miscellaneous and less regular terms such as capital investment, receipt of loan proceeds, amount. First documents used to update this journal are the cash voucher, cash receipts, or official receipts from the suppliers.
Ledger refers to the accounting book in which the accounts and the related amounts as recorded in the journal are posted periodically. The ledger is also called the book of final entry because all the balances in the ledger are used in the preparation of financial statements. This is also referred to as the T account because of the basic form of a ledger is like the letter T.
The general ledger. The account portion refers to the account title. The account number is an assigned number for each account title to facilitate ease in recording and cross-referencing. The date column identifies when the transaction happened. The item represents the source, journal, and the nature of the transaction. Subsidiary ledger. It is a group of accounts with a similar characteristic. It is an additional record to the general ledger utilized by the company to track the per individual accounts of the company's customers, creditors. The two most common types of subsidiary ledgers are the accounts receivable and accounts payable ledgers. Accounts receivable ledger is used mainly to track the individual account balances of the company's customers. Accounts payable ledger is used in tracking individual accounts payable balances of company's creditors.